Welcome to our channel. The Federal Reserve, often referred to as the Fed, is one of the most influential institutions in the U.S. economy. As the central bank of the United States, its reach extends far beyond the immediate realm of monetary policy, influencing everything from inflation to employment rates and even the stability of the global financial system. How did the Fed come to wield such unprecedented control over the economic landscape? In this comprehensive analysis, we explore the top 10 reasons why the Federal Reserve has such a powerful grip on the economy, delving into its origins, functions, and the intricate mechanisms it uses to steer the financial ship of a nation. Before we dive into the details, make sure to hit the like button, subscribe to our channel, and turn on notifications to stay updated with our latest content. Now let's unravel the Fed's profound impact on the economy. Number 10. The Fed's dual mandate, balancing growth and stability. The Federal Reserve's dual mandate, which is to promote maximum employment and stable prices, forms the bedrock of its influence. This mandate is not just a guideline but a powerful directive that shapes all Fed policies. Why does this mandate grant the Fed such sweeping control? By focusing on these two critical areas, the Fed can steer the economy towards sustainable growth while preventing runaway inflation. When unemployment rates rise or inflation threatens to spiral, the Fed's actions, whether through interest rate adjustments or quantitative easing, become pivotal. Their decisions ripple through every sector of the economy, influencing business investments, consumer spending, and overall economic confidence. This dual mandate empowers the Fed to intervene directly in various economic scenarios, shaping the financial landscape in profound ways. As the economy faces new challenges, will the Fed's traditional tools be sufficient, or will it need to innovate further? Number 9. Control over interest rates, a powerful tool. One of the most direct ways the Fed influences the economy is through its control over interest rates. The Federal Open Market Committee (FOMC) meets regularly to set the target range for the federal funds rate, which affects how much banks pay to borrow money overnight. This seemingly simple decision has far-reaching consequences. Lowering interest rates makes borrowing cheaper, encouraging spending and investment, while raising rates can cool off an overheated economy. The ability to manipulate interest rates gives the Fed a lever to pull in both prosperous and challenging times. How does the Fed decide when to tighten or loosen the financial reins? Number 8. The lender of last resort, stabilizing financial markets. In times of financial distress, the Fed steps in as the lender of last resort, providing emergency funds to banks and financial institutions. This role became particularly prominent during the 2008 financial crisis, where the Fed's interventions were crucial in preventing a complete collapse of the banking system. How does the Fed's role as a financial backstop influence market stability? By offering liquidity during crises, the Fed helps to ensure that banks continue to function and credit flows through the economy. This safety net is designed to maintain confidence in the financial system and prevent panic that could lead to deeper economic problems. Number 7. Quantitative easing, a modern monetary tool. Quantitative easing (QE) is a relatively new tool in the Fed's arsenal, used to inject liquidity into the economy when traditional monetary policy tools reach their limits. By purchasing large amounts of government and private sector securities, the Fed aims to lower long-term interest rates and stimulate economic activity. How does QE influence the broader economy? The goal is to increase the money supply and encourage lending and investment. While QE can be effective in boosting economic activity, it also raises questions about long-term consequences, such as asset bubbles and income inequality. Number 6. Influence on financial markets, a subtle hand. The Federal Reserve's policies have a significant impact on financial markets, often driving investor behavior and shaping market trends. By setting interest rates and implementing monetary policies, the Fed influences stock prices, bond yields, and overall market sentiment. How does the Fed's influence extend into financial markets? Market participants closely watch Fed announcements and economic indicators for clues about future policy moves. The Fed's actions can lead to sharp market reactions, as seen in both positive and negative scenarios. Number 5. Regulatory oversight, ensuring systemic stability. The Fed's role extends beyond monetary policy into regulatory oversight, where it monitors and regulates banks and other financial institutions to ensure systemic stability. This regulatory function aims to prevent risky practices that could threaten the financial system's integrity. How does the Fed's oversight contribute to economic stability? By enforcing regulations and conducting stress tests, the Fed helps to mitigate systemic risks and protect depositors and investors. This regulatory power is crucial in maintaining confidence in the financial system and ensuring that banks operate in a safe and sound manner. Number 4. Economic data and research, guiding policy decisions. The Federal Reserve's influence is also rooted in its extensive economic research and data analysis, which guide its policy decisions. The Fed conducts in-depth studies on economic trends, labor markets, and financial conditions to inform its actions. How does the Fed use data to shape its policies? By analyzing economic indicators and forecasts, the Fed can make informed decisions about interest rates, QE, and other policy measures. This data-driven approach ensures that the Fed's actions are grounded in a thorough understanding of the economy. Number 3. Global impact shaping the international economy. The Federal Reserve's policies have a global reach, influencing economies beyond the United States. As the world's largest economy, changes in U.S. monetary policy can affect international financial markets, exchange rates, and global trade. How does the Fed's influence extend globally? Decisions made by the Fed can lead to capital flows between countries, impacting emerging markets and international economic stability. Number 2. Historical legacy, evolution of central banking. The history of the Federal Reserve reveals how its role has evolved over time, shaping its current position of influence. Established in 1913, the Fed's functions have expanded from its initial focus on stabilizing the banking system to encompassing a broader range of economic responsibilities. How has the Fed's historical legacy contributed to its current authority? Over the decades, the Fed has adapted to changing economic conditions and challenges, enhancing its tools and expanding its mandate. This historical evolution underscores the Fed's ability to adapt and remain relevant in a dynamic economic environment. Number 1. Institutional authority, the Fed's core power. At the heart of the Federal Reserve's influence is its institutional authority, which grants it the power to shape monetary policy, regulate financial institutions, and influence the broader economy. This authority is derived from its statutory mandate and the trust placed in it by policymakers and the public. How does this institutional power underpin the Fed's role in the economy? The Fed's ability to set interest rates, conduct monetary policy, and provide financial oversight reflects its central role in maintaining economic stability and growth. This core authority positions the Fed as a key player in managing economic fluctuations and ensuring the resilience of the financial system. As the Fed continues to navigate complex economic challenges, its institutional authority remains a fundamental aspect of its influence. What future developments might shape the Fed's role in the economy? Thank you for watching. If you enjoyed this video, give us a thumbs up and subscribe for more updates.